Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my guest is Steve Pletz. Steve, you want to give us a bit of an intro to yourself? Tell us a little bit about yourself, maybe some of the investing journey story.
Yeah, thanks. I'm excited to be here. Thanks for having me.
You're welcome.
Active realtor in Kitchener-Waterloo, Ontario. Market you're familiar with, Glenn. And I've been doing that for, 14 years. That has gone well for me. And started buying properties 8 years ago. And back then when it was like, a lot easier and all the numbers made sense, right?
Yeah.
So I was buying some single detached, just some kind of like long-term buy and hold stuff, right?
Yeah.
And that went well for me. And then I kind of hit that glass ceiling where, started running out of money and, funding in Canada, with getting mortgages can be interesting once you get to a certain level, right? So kind of got pushed out into other areas, mainly the US. So that's when I stumbled on your podcast, started, Bigger Pockets, all the usual places, right? And just kind of honestly self-taught, just stumbled forward and just love to learn different like asset classes. I love buying, got into Airbnbs, like singles. I do some small multifamily conversions, a little bit of medium-term rents. Like I tried quite a few things, but lately what I've been focusing on is operating mostly North Florida, Michigan, which is newer for me. Yes. And a little bit in Eastern Canada. And then I still have some assets like here in Ontario, but essentially because of the tenancy laws, trying to get out of those and sell some of those off and put my gunpowder elsewhere. And I'm passionate about it, helping other people. I wrote a book about it, like essentially remote investing, I call it, right? A laptop and a cell phone, you can rock and roll all day. I love it. And just love connecting people to the same connections that I have and hopefully helping them build wealth. So that's what I've been doing lately.
Yeah. Well, maybe let's go into, unless you have another idea you want to go down to, but maybe let's just go through the story. And then maybe I think some of that, it just inspires people to actually take some action whenever they hear people actually doing it. And so maybe from, I guess, where you were kind of getting stuck in Ontario, from there, like where was the first one? It sounds like it was in Florida.
Yeah, like all Ontario people, we love our Florida, right? Yeah. I was no different. I grew up going there as a kid. So one of my goals, whether it made sense or not, I'm like, I'm gonna get a house in Florida, right? And a lot of my investors, they love talking Florida. So that was kind of the natural path. I feel like I played it pretty well. I'm glad I settled in Pensacola, so like way up by Alabama, way in the north part. They call it the Emerald Coast. Yep. A little bit better bang for the buck. Not a lot of Canadian flavor there, but honestly, it worked well for me because once I made my connections with my wholesalers and realtors, it was like I was like the only Canadian, right? Like I was like the nice Canadian with some money, and it really served me well, right? So, and a little bit more insulated from, natural disasters and that type of thing. Started some short-term rentals there and got into some creative finance down there. So that's how one of the levers that I pulled to get into, to continue to scale. Right. My first couple were like just more traditional hard money, like DSCR loans.
Yeah.
But then lately I've been doing seller finance deals down there, which has turned out really good. So that was kind of my first intro into the US.
So the first one that you bought, how did you finance that? Did you use cash? Did you use that was a DSCR loan, or how did you go for the very first one?
Yeah, very first one. Thankfully my real estate gig here can, make me some money. So even with our tax implications, I was able to scrape some money. And essentially that's what I did. The conversion rate Canadian US was a little bit better back then too. And then that's how I got that first one. So it was a DSCR loan, I had to put my 30% down and, paid too much money to the mortgage broker, Yeah, live and learn. I've learned a lot going through that process, and then setting up. I found a great team down there. As you know, it forces you when you're buying. It forces you to get good at the game
Oh
when
yeah.
you're buying remotely, right? So I found a great unicorn realtor down there. I call him. He's like a hustler. He's like awesome. So really helped me out. And as you know, you find the right contacts, and then generally they connect you with other people and kind of scale it that way. So that's how I started that first one. Got it set up. This was back about 4 years ago, and made some really good money the first couple years. Like it was awesome. I was like, wow, like I got to do more of this. But as the years have gone by, it is getting harder, right, to continue to be profitable, just with the other costs associated with it, like as you know, insurance in Florida, right, has really taken a chunk out of our profits. But overall, it's still been quite good. So that was my first one down there.
So you said you had found a great team. And I'm not looking for names, but like what kind of team members, like what were the different people that you had to find in
Sure.
order to pull off an Airbnb down there?
Are you interested in investing in the US? I honestly see Canadians making tons of mistakes, simple mistakes that could be avoided by just a quick phone call. Honestly, I think we should just get on a 15-minute call. You ask me some questions, I answer some questions, and I tell you a little bit about the coaching program. We see if it's a fit. My coaching program is completely different than other people's. What my goal is to help you actually implement the material. All the videos are pre-recorded, so you can just zip through those on your own time. But when you're actually buying property, this is what sets me apart, is that we actually sit down, you do your deal analysis, you have questions, ask me some questions. Let me go through it with you. Let me help you. And this is what's going to set it apart. This is why you're going to avoid mistakes. You're going to miss those little things that you just missed that could cost you a lot of money. Maybe I can see it. Maybe my experience. I've been doing this for a while down in the US. Let me help you. Let's do a quick 15-minute call. If that's of interest to you, go to glensutherland.com and you can book a 15-minute call. Anyway, hope this is helpful. Thanks, everyone.
So I call them like unicorn realtors, right? So that, it's so hard to get. I'm a realtor. Okay, I can say this. It's easy to find someone that'll, sell your house, buy your house. That's easy.
Yeah.
But to get someone that has experience with their own money, knows how to build wealth, like understands the game really well, I call those unicorn realtors. So I always just say, start with the unicorn realtor. So I found my guy actually just by joining a whole bunch of social media, like Facebook pages, in that pocket. And then once I had several names that kept popping up, then I would just cold call them, right? And then just kind of, start the game that way, and really hit it off with my buddy John, and that's how I found him. And yeah, I still like, but finding cleaners and finding, that's so much easier now. But with Turno and other like different software programs, and even like I self manage it, but even that's quite easy, right? Like I use Hospitable as a software, like does all my messaging, sends door codes automatically. So that part about it, I'm a bit of a techie, so I found that actually part of it like awesome. As you know, in Canada, we're usually a little bit behind on that stuff. So I found that really nice operating down there. Yeah.
So you said it was fairly easy to self-manage it. Like, I don't know, even with myself, I felt like my phone was constantly ringing whenever I had to do when I was self-managing a few Airbnbs, because I was like, holy crow, there's just random people asking questions about the property, or, how many plates are there? And you're like, oh,
Yeah. How many? Yeah. I don't
how
know.
many came in that set? I
Right.
don't remember.
Yeah.
I didn't set it up.
Yeah. It's definitely I call it the hospitality game, right? Like it's not for everybody, but I would say cash flow covers a multitude of sins, So when you're making, like I was making really great money on this back then, not as much now. And so it definitely made it a lot easier, to deal with the odd, guest that would never be happy no matter what, right? But generally I found it was the best way I could find to cash flow a property. There was like no question. But you got to put the work. So there's always a trade-off with everything, right? So that's how I look at it. And, I think I'm operating 3 short-term rentals right now. So it's not like it's not like I've got like 25 of these things. Like I could, that wouldn't be for me right now in my stage of life,
Right.
but to roll like 3 of these, I find it actually quite manageable. Yeah.
Oh, okay. That's cool. And so like you bought some properties in Florida and then was it Detroit you said or Michigan you went to?
Yeah, Detroit. Yeah.
I'm guessing you didn't continue with Airbnbs there?
Well, fun fact, I actually am.
Okay.
Yeah, that was not the original plan. I just, much like how we met, just kind of watched a podcast and I cold called an acquisition team, just developed a business relationship and they offered me, basically they were unloading one of their very successful Airbnbs. Like all the numbers are there, and it was actually better than my Florida numbers. And I was shocked. So I bought two. So I bought 2 of them recently, and they're just a little bit north of downtown. So you get a lot of like the sporting events. Like greater Detroit is like 5.5 million people. Like it's like the scale. It's hard for us to understand the scale of this stuff, right? Until you start operating down there, and you're like, oh yeah, like Texas is the same population as Canada, right? So.
Yeah.
I just found that incredible with the opportunities down there. So I am. It's newer for me, Detroit, but my original plan was to just do some larger single families there, get some decent cash flow, but the appreciation has been quite good there for the last several years. So I was going to kind of do a 2-prong approach, but then had the opportunity to do these Airbnbs there. So yeah, just started with that.
So it was already an Airbnb and then you
That's correct.
took it over and then
Yeah.
honestly, I guess you don't have to set up the team or anything and you can just start with somebody else's team.
That's right. Yeah. Yeah. It was kind of a no-brainer. Yeah, for sure.
Where was the previous owners self-managing it as well, or did
Yes.
they use a company? Okay.
Yeah, this one's a bit of a cheat, like because the wife, I just very fortunate with my timing. Essentially, they wanted to get into the offering these short-term rentals to investors just like me, as opposed to their regular long-term rental. So the timing was good. So they knew I had some experience with this. So it was just easy for them to be like, hey, you know the game, do you want to take this over kind of thing. But one of their employees for a quite reasonable price offered to manage it. So this one is like my little bit of a cheat where I'm just gonna, at least for the first year, sit back and relax.
Yeah.
And so we kind of helped a little bit with the setup, but other than that, essentially this is more hands off. But the numbers are so good there that I'm not really concerned about. So I'm paying 12% to have it fully managed, which is incredible.
That's an incredible price.
That's a great value, right?
Yeah.
Whereas like down in Florida, usually you're looking at like 18% or maybe 20. So for that kind of money, I'm like, it's a no-brainer, right?
Yeah. Okay. So did you do anything else in Detroit, or you just did the rental there, or the?
Yeah, just the 2 short-term rentals. I love like that market. Continue the more that I go down there. I really like it. Great food scene. And again, the scale is amazing and it's an appreciating market, usually meets the 1% rule with most of the rent, like quite a few of the rentals down there. If you don't want to get into short-term rentals, right? And I always figure like, if I want to convert these back to just a single family, whatever, I'll still cash flow them. Right. So I love having kind of multiple exit strategies. Right. So
you said, those 3 properties, are you doing any of the long-term rentals or are you only doing the short-term rentals?
Yeah, I do have a couple different asset classes. I'm doing like a larger 4-bedroom long-term rental down in Florida. I bought it. It's like near the water. It's in a good little community that I figure if I want to like pimp it out someday and really make some good money if I try to resell it, then like that's why I got that one.
Yeah.
So there's all these different, I bought that from a wholesaler. As you know, like once you kind of get into the game, a lot of times, you have people sending you deals, like you don't even really have to search so much anymore, right? So thankfully, that's the phase that I'm at. So much so that I'm like trying to find other people, right? And I just send them to some of my crew, right? Or some of my investors in Ontario that are looking to diversify. So I would say my overall like investor thesis would be trying to like operate, just diversify geographically too, because I wanted, where Detroit came from is I I didn't want to just keep plowing into that one metro market, which is, Pensacola in Florida, which is a great market.
Yeah.
It's a good size. It's big enough, not too small, not too big. It's got everything you need, a good ratio for rents versus the cost of real estate. But the ratios are even better in the northern markets, as you know, right? You operate in the northern markets. But my goal was I looked at Cleveland, I looked at Ohio where you operate. I just found Michigan. It was a really great opportunity. I kind of try to keep my options open, and it presented itself. And so that's why I started there. But I'm trying to get good at trying to focus on just a few different markets so that I can look my investors in the eye and be like, hey, like, this is what I'm doing. This is where I roll. Here's all my numbers, right?
Yeah. Oh, I love it. And it just popped in my head, but at the start, you were talking about doing some creative financing on those, or seller financing on the.
Yeah.
Which kind of seller financing did you do? Because there's land contracts, contract for deed, lease options, traditional seller financing. What did you set up?
Yeah, so it was a contract for deed, and it was a great, like, 4%. I only had to put 10 points down, which is incredible. With our DSCR loans, normally I'm putting 30 points down, right?
Yeah.
So that one was a little duplex that a wholesaler offered to me. And so I called my unicorn realtor. I'm like, John, you got to get to this place. I got to send my EMD like yesterday, right, to get this place. So he just whipped through, had a quick look, and he's like, yeah, man, this is, not it. Like, it definitely, I inherited tenants. They're already paying, like, it's already cash flowing, fairly turnkey. And so that's how that one came about. That was brand new for me. So, dealing with the title company, and that specializes a little bit more with seller finance, which was actually really quite smooth, to be honest. I didn't know what to expect. All I knew is I saw the 4% and I saw the 10% down, and I saw that it cash flowed. I'm like, I'm in, right?
So did they give you like a certain term? Like, you got like 5 years to figure this out, or is it like the full like 30?
When investing in the US, Canadians make so many small mistakes. They assume everything's the same. They don't understand all the intricacies. If you just would like a free guide on some of the common mistakes that I see Canadians making, just go to CanadianInvestingInTheUSA.com/mistakes and check out my free guide. And while you're there, if you want to book a phone call, I'm open. Me personally, not some other person. I'm personally open to doing a 15-minute phone call with anyone, answering some questions, sharing some experiences. So if that's of interest to you, please go ahead and do so.
Oh man, I wish. Yeah. So this particular one is a 5-year balloon, but it was so cheap. It's 300. I bought it for $300K, right? So essentially, after 5 years, I'm not going to owe a ton on it, and I'll probably just sell off one of my Ontario places. And I could buy 4 of those, 5 of those with one of my townhouses that I'd sell here, right? So that's kind of my plan. Essentially, as I continue, I've got 4 left in Ontario. So as I, just with our taxes and everything, I'll probably sell one a year maybe, and just looking to channel that down into deals like that, right?
That's awesome. And then this popped in my head also. So I know this conversation is so broken because I'm jumping all over the place. But when you're talking way at the start, and you're talking about financing, and you're talking about Airbnb financing, did you have to, or was the lender even curious about that it was going to be an Airbnb? Because I've heard of people having troubles with that, and even myself, I would either line it up as a single family first, rent it out as a single family, and then convert it to an Airbnb at a different, or short-term rental at a different point later down the road. Was that an issue for them down in Florida?
No, that was okay. At the at the advice of the mortgage broker, he's like, this lender here that I'll set you up with, they're the ones that would suggest giving us estimates for the short-term rental, and that particular lender accepted them. So I guess it just depends. The broker set me up with one that was okay with, right?
'Cause I've heard
So
with some
it
people,
didn't, it wasn't an issue for me.
they change your leverage rate sometimes just because they're like they don't want to count all the income
No,
or potential income, especially if it hasn't been an Airbnb before.
right.
You're like you're otherwise you're kind of just making up numbers, right? So
Yeah, no, that was okay. It happened to be okay. For me, I mean, doing the creative deals I found were pretty exciting because, it's like, oh, what's your bank statement say? Oh, okay, oh, you have the money. Okay, great. Let's do it, right? It's really incredible coming from Canada where they take your firstborn, right? It's like ridiculous here. So I found that very refreshing. I would say, unless I'm getting an absolute killer smoking deal, I don't think I'd be looking at too many more DSCR loans. Like in that sense, there's quite a bit of opportunity with the higher interest rate model down in the States of seller finance, in my opinion. I've looked at a lot of sub twos. I haven't jumped into that world yet. I don't know if I will, but so far, like my two seller finance deals down in Florida have gone really well. So I'll probably continue on with that, I guess. Yeah.
yeah. No, I've seen the same thing too. And like with the sub twos, you're like they're citing, but when you start to run the numbers, like if they didn't get their mortgage at the right time with the right interest rate, then you're like, it's not that much of an advantage. And then you're like, they're going to have to take the risk of, you managing their mortgage basically. And a lot of times I find that even if they're open to it, well, usually the ones that are really open to it, there's a reason.
Yeah. You don't want you don't want to be married to that person in the business.
I have done some
right?
though, but like it's a little,
Okay.
it's not as like simple as people make it sound to
Right.
find like this killer unicorn deal. Find a lot of them, you're like, or if you're inheriting this mortgage, they just got it, and you're like, they haven't paid any of this off, and you're in order to even take this over, you're paying full price on the house, right? Like, and I'm like, I don't pay a full price for anything. Like, I want a deal.
Right.
So anyway, a lot of them they want full price, but sometimes hey, it's it's a teeter totter, right? Sometimes
Yeah.
you'll win on the interest rate, and sometimes you win on the price.
Yeah.
Typically, I'm a guy that always wants to win on the price. But
Sure.
sometimes if you're a long-term holder, then you could win on the interest rate and make it cash flow for a long period. And
That's
I
right.
see both sides of the coin.
Yeah, I agree. I think if I was like a lot younger and didn't have as much to lose, I would probably take a harder look at sub two, right? Just for a very low cost to entry. But like you said, it can get dicey, right? Like just like can get really onerous with just if something goes sideways. So, and there are fixes to it, as you know, but I'm at this stage in my career, like my portfolio, like I'm trying not to lose, right? Like I don't need to. I just need to hit a bunch of doubles, right? I'm so close to like my, I don't know, fire mark, right?
The
Like
thing
my,
is, I hear the opposite too from the young people, is that they're like, they say, I can't afford to lose. I only have enough to do one and barely that. And I can't afford to lose. And so you're like, you hear from both sides. Honestly, I think nobody likes to lose.
Yeah. In summary,
that's probably the honest truth.
in conclusion, yeah. Nobody likes to lose. That's good. I should have put that at the end of my book. Jeez, I don't know. Where were you? Yeah, that's awesome. Yeah.
Anyway, Steve, awesome chat. People wanted to track you down. How do they do that?
Yeah, just Google my name. I'm supposed to be on the on that big world wide web somewhere, but yeah, just Steve Pletz, so Pletz. So just Google my name, and I'd love, and actually, if you're okay with it, Glenn, I'd love to offer my book. I just released it a few days ago for free to your listeners. So just send me a note, and I'll give you guys the e-version. It's the remote real estate investor. Glenn, you had a part of it too. So yeah, thanks for that. And just always been a fan of your channel. I've learned a lot. I just trying to pay it forward a little bit, and for guys like you that have been doing this for years. So yeah, if anybody wants to just shoot me a note, I'll hook you up and send you the e-version, no problem.
Awesome. Well, Steve, honestly, I say that all the time. Oh, there's a bunch of gold nuggets. That actually had a bunch of gold nuggets in that conversation. So I think there was a lot of value for people listening.
That's great. Thanks for having me. Thanks so much.
That was a nice video. Bye.